The following is a presentation of TFNN. It is now time for Trade What You See with your host, Larry Pesavento. Now, Larry Pesavento.
Okay, folks, I didn't think it could ever happen, but I have actually preempted Michael Jackson. I can't believe they didn't allow that song to finish, but that's the nature of showbiz, Michael. On to the next one. The first chart that I'm going to show here into Tiger TV today is one that I follow very closely, and I do that because I've watched Basil work with it over the years. But it's the VIX index of volatility that shows fear and greed coming into the market. And as you can see, since last August, we had those three higher bottoms known as the 1-3-5 pattern, where each bottom is higher than the other, which defines the trend. And then we had it again during the March and April and June level this year. And then we had the big move, coming off of the full moon that we had on May the 28th. Now, we had a full moon on June 23rd. That marked the high that we made up there when the VIX was at around the 22 level. And now we're coming down, and we have a new moon coming in on July the 8th. And now we have a holiday tomorrow. And let me remind you, most of you already know this, but we'll remind everyone anyway, is that there is a lot of statistical evidence going back from 1805, when they really start getting good stock data. The first 13 years, from 1792 until 1805, there was very little available. But then after 1805, the stock prices were quoted in the New York Times and some of the other local papers, like Philadelphia Inquirer and places like that. But the main thing that we want to remember here is from that time, 1805, to where we are now, we have over 200 years of data, and what we're looking at are the four major holidays that we have here in the United States. We start out with, the first one, of course, is Memorial Day, and then we have July 4th, which was really the big one, and July 4th is one of the bigger ones. So the day following a major holiday, and this will be the 4th of July, we'll be trading on Friday the 5th. The odds of the stock market closing higher on the 5th will be better than 75%. The same thing occurs on Thanksgiving. The day after Thanksgiving, the Thanksgiving holiday, the odds are about 75%. Remember last year and the year before, the day after Thanksgiving started some of the biggest bull runs we've had in a very, very long time. And the third one, of course, is the day after Christmas, the holiday after Christmas, and then also the holiday following the New Year's Eve celebration. So those are the four. It's well over 800 samples, using this thing. And with the percentages that high, better than 75%, you have to respect that. Now, the other thing that's interesting is that, we've looked at this, this full moon, new moon phenomenon that Tom Pelk worked on from London when he was at Nomura Securities. And basically, he's still at Nomura Securities. Basically, it was if you buy on a new moon and sell on a full moon, that it gives you a much higher return, about 16 times greater than if you just buy and hold. But the reverse of that is if you're in a bear market and you buy on the full moon and sell on the new moon during a bear market, then that gives you the added effect of making even a greater return. So since we made our high on the full moon, which we made a little while ago, and we're making a low on the new moon, which is the 8th, that would suggest that we could be in a bear market. So we'll wait and see. We've been lower highs for quite some time, since May the 28th, but it's still quite early, and some things are still acting pretty nicely. However, the VIX index is not one of those things. It's pulled back to exact 61% retracement of the low we made on May the 28th. that was at the $16 level. As long as we don't go below the $16 level in the VIX index, I believe that we have the possibility of going a great deal higher, all the way up to the 25 level in the VIX. I think we'll probably get a lot higher than that when we're into the fall, but that's what we're looking at, on a short-term basis. But most of this hinges on the fact that we want to be able to be right near that 16 level or higher during that time. I think that's something that is rather important that we actually do. Now, the next chart that I wanted to show here, I have to do a slight correction because my data was off. We had a big storm here in Tucson yesterday. We're in the monsoon season, so it rains quite a bit here, and we have to be able to use generators, because if you lose your data, it's very, very frustrating, and we don't want to lose data. So I have two generators that kick the thing moving. So I'm going to show the Dow Jones Industrial Average here, and shows I'm going to have to do it twice because I didn't get to draw in the Gartley pattern that formed when we made the ABCD pattern down on the 23rd, which was the full moon. But what's happened now, you see, is we've had these lower tops coming in on the Dow, and we went up to the 618 over the last 5 days. We've hit it several times, and that's telling us that the market is in a downtrend because we have lower tops. That pattern in the Dow Jones is basically the 135 pattern, where you have two lower tops with the actual high top coming in, and so that tells us that we're basically in a downtrend in the stock market. I know not many people think that, but that's in fact what it is on a technical basis, because if you look at that, that's what it's telling you, is that you're able to to see that. Someone asked a question about the time during the Civil War. Well, I wasn't there during that time, but I've read a lot about it and studied it a little bit. But during that time, from 1862 to 1866, we had the war between the states, and everything was total quagmire. If you ever get a chance to see the movie Lincoln with Andrew Day-Lewis and Tommy Lee Jones, you should really see that movie, because it won many Academy Awards, and it does a really good job of depicting some of the things that were going on during that time. When you stop and think how far we've come in 150 years, it's just really amazing. The question is, where are we going to be in the next 150 years? That's the bottom line of what we're looking at here. So anyway, this is what we're looking at with the Dow Jones, and the Nasdaq looks the same. The S&P 500 looks the same. I posted that once into Tiger TV. I want to do it again because it shows that we have basically been in a downtrend since May the 28th, and we're continuing down. And we've made some really nice ABCD patterns, as we move through the system, and we'll be able to look at. So, we're showing right now the E-mini S&P 500 on a 60-minute basis, and that we've reached up against these 61% retracements several times during that time. Now, many things, well, not many things, but a couple of really significant things have happened for us in the trading department that we've been waiting for quite some time, and I wanted to talk about those next because we've got a break, and I'm going to have to go into the break and do it. But we have a situation that we talked about a week or so ago. I'm going to blow this up so everybody can see it. Oh dear, I've got to make a correction, otherwise it's going to look a little too cluttered, and we'll just move this, get this out of the way here. And that should do it. Hold on just a second. We'll be able to see the big ABCD here that we talked about at that 134 level in the euro. And what we've done now is we've come down and we've made a perfect 786 retracement off of the last high. In other words, we've gone from 144 all the way down to the low today, which was a perfect 786 retracement at 129.30. We rallied about $800 during that time. That would tell us that we're that we probably have reached a pretty good bottom in this bear market, and we should get a nice correction, possibly all the way up into the 132, 133 level in the euro, where we want to look at it for a potential short once more, because on the longer term chart in the euro, which I will post because it's such a bearish chart that you want to be able to see how bearish the euro has been over the past few years. You can see since 2008 we've had a tremendous move down from the 160 area all the way down to the 120, and then we rallied back, to the 61% up at the 786 retracement up at the 150, and then down, and then just recently we made a perfect ABCD pattern at the 134 level, which happened to be a 61% retracement. And this is a weekly chart, folks, so this goes back a long way, and that means that we're set up for a move down into the 120s in the euro is what it looks like to us. You need to get below 127 first, and then below that you're going to be looking at around 123 in the euro. So it's did make a perfect 786 retracement last night, and those of you that like short-term patterns, I want to post in the pattern that we like so much is the butterfly pattern. And on the hourly basis, you can see that it came right down into that 786 level at 129.30, making two large ABCD patterns, and just really completed it in really nice perfection. The problem is it's in the middle of the morning. That happened around 1 o'clock in the morning Tucson time, so I don't try to stay up that late, but the market did hit that. By the time I woke up, 3 hours later, the market had a huge move, and it gave one pullback, but it missed the 61% pullback by about 3 pips, and then of course it took off and has made the 61% retracement off of the last high already, which tells us that this market with these long-ranging bars that we're having is getting ready to make a much better, much higher move. Like I said, I think it's going to make at least the 132 to 133 level just by being so very oversold. So those are the ones that were. This is the big money one, And by the way, Forex does not stop trading on the 4th of July, folks, because we're the only ones that use that as a holiday. There might be a few other countries that do it, but believe it or not, in Britain they don't celebrate the 4th of July. I think that's an annual day of mourning for them, but we do have the big holiday here. Now, Forex trades because you're looking at these Forex banks all over the world, and because holidays don't mean the same thing to certain people, that Forex will be trading. It'll be thin, but they will be trading Forex. I don't recommend trading during that time. I really think it's a pretty good time to take a break. Hey, speaking of breaks, guess where we are?
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC. McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX. The Art of Timing the Trade Charts has officially launched at TFNN. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind software, The Art of Timing the Trade Charts allows you to scan for Fibonacci formation setups, including Gartley's, butterflies, ABCs, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the market for stocks just beginning to form the trading patterns that many investors spend days, weeks, and even months searching to find. As part of our introductory pricing, we're offering licenses available at only $59 per month. We're so confident that you'll love this new outstanding piece of charting software that we'll even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Lock in your low price today by ordering your copy at TFNN.com.
Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks. I know this isn't the commodity hour, but we had a couple of things happen over the last 24 hours I think that are relatively important. We've been talking about crude oil making this 102 level per barrel after we broke out of that 98 level consolidation that we had, and we have certainly reached that spot today. Evidently the oil stocks report was very, very bullish, and of course the market had rallied yesterday right into it, and today it tested that high one more time and then has since dropped $1.50 a barrel. Now, whether that's going to be a major top or not, I don't know, but the news was incredibly bullish from what the announcers said, and I'm not sure that they know what they're doing, but a lot of people don't think I know what I'm doing, so it's an even-Steven game. But anyway, all these targets have been met now. We've been waiting for it to get up to that 102 level, and that is what has happened. And so now what you'd want to be doing is to be waiting for a low-risk entry into the short side of crude oil. That's my opinion, of course. But, this is my show, so I get to make my own opinions, at least until Tom calls it otherwise. So we'll just have to go along with that, and we'll notice what happens over the next move that occurs. I wanted to do one other thing, and that is to show you this pattern that we talked about yesterday, on Monday, and that is the long-term head and shoulders pattern that we've had in the Japanese yen. And I think I can get that into Tiger TV, and we can spend a few minutes looking at this. This goes back 6 months, and it shows the head and shoulders pattern. And what's interesting about this is that the symmetry between the shoulder and the head and the shoulder, they're exactly equal. In other words, the number of days between the left shoulder and the head is equal to the number of days between the head and the right shoulder. The right shoulder came in around the 61% retracement at 99.80. We rallied about 80 pips above that last night, and then since we've had a big move down, taking out yesterday's low, so that's telling us that something very big is happening with this particular currency, because unless it can close really strong today, this is telling us that this head and shoulders pattern is in effect, and we should be looking at a move down. That would equate to the Nikkei Japanese stock market going down also, because the correlation between the Japanese yen and the yen currency, the Japanese yen currency, and the Nikkei Dow is better than 90%. It's one of the most highly correlated things that you could possibly find. So these are the things that we're watching here, with the currency markets. And it appears that we do have a head and shoulders pattern there. It might fail, but the odds still favor that this is probably going to hold for some period of time. Now, I wanted to do one other currency here, because we had a situation almost identical to what we had in the euro happen, and that is our British pound. If you recall, we completed a big Gartley pattern on this up in the 158 level, and we have come down very, very strongly. In 13 days, we've come down all the way from 157.5 to 151.5, 600 points, which is equivalent of around $3,800. What happened today, though, is we made a slightly lower low than the previous days. But if you watch the smaller patterns on these smaller time frames that we usually do, I just wanted to put this into Tiger TV and show you the beautiful butterfly pattern that happened right on the bottom last night, about 3:30 in the morning New York time. It was making just a lovely butterfly pattern down at the 151.30 level. That was 30 pips below the 786 on the daily, so it's a very, very small amount. And the question is now is that if you're not in the pound, what you should be looking for is to try to find an ABCD pattern. I posted one into Tiger TV to let you see what it looks like. Now, I don't know where the high is going to come in, but after that high comes in, it should follow an ABCD correction, and that would give you the chance to enter the market. When we get back from the next break, what I'm going to do is to show you the same situation in gold and how it occurred, and how to wait for the second AB equals CD correction in order to enter the market. We just missed it last night. Take a break here, 877-927-6648.
With the stock market flirting with all-time highs and volatility back, now is the perfect time for a 2-week free trial to Market Insights. On Monday, June 24th, Tom O'Brien closed out all 5 open positions in his daily newsletter, Market Insights, with all trades being profitable and ranging from a 2.23% gain all the way to more than an 11% gain in just one position, for an incredible 32.7% profit combined between the 5 trades. Let Tom O'Brien's years of market experience work for you. If you'd like to see for yourself what kind of trading newsletter Tom O'Brien delivers to his clients each morning, then now is a perfect time to sign up for a 2-week free trial to his daily newsletter, Market Insights. In a volatile market like we currently have, the potential for fast market moves like we've seen recently is a trader's dream. So don't wait any longer. Sign up for your 2-week free trial to Market Insights today at the front page of TFNN.com. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN. No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Okay, we're back, folks, and I want to take a look at the gold market now. On the 27th of June, we hit a very important Fibonacci point on the long-term weekly charts. The Fibonacci number was around 1170. We got to 1177 in gold, down considerably from the $1,932 per ounce that we made in September of 2011. So we've been in a very extended bear market in gold where it's given up better than 40% of its value over that time. But the fact that it hit that number so perfectly in the long-term weekly charts, this goes back to 2008, the low. I will post that after we're done talking about the 30-minute chart, because I think this is the one that I'm trying to pinpoint as far as giving us a good place to enter. Gartley, when he wrote his book, Profits in the Stock Market, one of his famous paragraphs in there saying that the easiest trades to do were to buy the first ABCD correction in a new bull market, or sell the first ABCD correction in a new bear market. Well, you have to determine whether it's a new bull market or a new bear market before that'll work. But if you do look at it, it'll give you a pretty good chance of finding these. The ABCD patterns work a lot of the time on their own, but when you're in the direction of a major bull market, then you have something going. Well, what's happened with gold since we made our bottom down there? We rallied better than $90 an ounce in a matter of 4 trading days. That's the biggest rally that gold has had since going back well over a year ago. So if we could do $90 an ounce in 4 trading days, can you imagine if buyers start to come in gold, where you could get a $300 rally in gold and still be in a bear market? So that's the possibilities that we're looking at. Now the chart that I'm doing at here is going back since the 27th when we hit that 1177. The 61% retracement of that move coming in will be at around $1,212 a share, somewhere in that zone. That's where I would be looking to enter longs, and then you'd have to risk about $12 to $14 because it's so volatile. You'd have to put your stop below the 1196 level. So but the profit potential is huge because if gold can move $90 in 4 days, it could go down $90 in 4 days also. But you've got to be able to protect yourself if this pattern doesn't work. But at the $1,212 per ounce level, that should be major support in the gold. Ideally, it will take several days to get there. And the reason for that means that people are not willing to sell their gold on the way down. You remember how easy it was for them to sell their gold on the way down? I mean, it was dropping like a safe falling out of a 50-story building. And, there was just no buyers in sight until we got down below 1,200, and then buyers stepped in, and we've had a $90 rally from that bottom. But the easy entry, if it happens, is going to be at the 618 retracement at 1212. Now, the other alternative is that we might not get there because the low that we made last night, I was looking for a 382 retracement to come in around the $1,234 per ounce level. The market only got to $1,236 per ounce. It missed it by $2 an ounce and then promptly rallied 20 some dollars higher. And if we take out the highs at that 1270 level that we made yesterday, then that's telling us that we have a large ABCD pattern forming that's going to move gold another $90 higher, right near. In fact, it'll be just right at the $300 per ounce level. That's what I'm watching, in the gold market. So it's a key level to watch, and it has potential to get there, but until the pattern completes, you can't really do very much, to make it work. Now, I wanted to bring out a chart that someone shared with me. It's a long-term weekly chart in silver, going back to the same low at around 2008 in October. That was during the too big to fail for the banks and everything. But we have completed within just a few pennies of the silver market making a very large ABCD coming off of the 2011 area, and we can easily get a rally of $10 an ounce in silver, and it would still be in a very bearish formation. Well, $10 an ounce in silver is no small piece of change, kids. That's 50 big ones, 50 large, as they say at the track. And that's a heck of a big move. So it hasn't happened yet, but silver has actually been holding bottoms better than the gold did. When gold was making, new bottoms, silver was able to hold up above the, above the level. If you'll give me 1 second here, I will show you that. Because it was making a triple bottom when we were. Okay, hold on 1 second. I've got to erase this notations here because they're related to dates that are already passed. But the silver, I'm going to put this 60-minute chart in so you can take a look at it. If you look at the time frame at the bottom there, between the 26th and 27th and 28th, when gold was, going down, on a catapult to the downside, silver was making some higher bottoms. We had the actual bottom came in on the 27th, which was 1 cent lower than it was on the 26th, which was basically nothing. And then again on the 28th, it made a nice retest at the 61% retracement, and from then had a big move. Now we have the same situation occurring in silver, and I think it's something that we ought to take a look at it, because if we get this correction that we're looking at, it could do the same thing in silver that it's going to do in the gold market. And I'm going to put that in there so you can see that gold or silver could get down to this $19 per ounce level without too much trouble, and that would be what we think would be a low-risk trading opportunity in the silver if it reaches that level. So that's what we're looking at. If you have any questions, it's 877-927-6648. And the next one we want to look at, of course, are our good friends from the from the U.S. Treasury, are the Treasury bonds, and we want to go to a little bit shorter time frame so we can see the quality of the rally that we've had here recently, and then we can move from there. We have been rallying now for well over 5 days, and all we've been able to do is to make a 50% retracement from the high that we made back on, I made a mistake. Hold on here. I've got the engineer's going to be yelling at me. Anyway, we've made a nice rally from the 133 level. We've got up to the 136 and change level today. My ideal spot to try to short the bonds will be up around 139. There's the possibility that we could get there, but this has been a very, very quiet rally, much like the one that we had back on June the 10th through the 17th. It only rallied a few days. This rally has taken longer because, you know, we are in the 7th day of this rally, and that's usually all you get in a bear market is a 7-day rally. Well, if you do a little tiny bit of research and you went to the daily chart on Treasury bonds, you can see that I've marked on here the rallies that we had in late May, early June, and also in early July. All of those rallies were exactly equal. They were a little more than 3 1/4 points. Each one of them was 3 1/4 points. So the market's doing the same thing. To me, that tells us this market is just incredibly weak. I think this is the next gold market as far as the movement to the downside. I believe that interest rates are going higher, and I don't think there's any question about that on a long-term basis. On a short-term basis, you know, they might get a little bounce. Hey, we've got a caller. We got a caller from Dan in New Jersey. Are you there, Dan?
I am. Thank you.
What can I do for you, my friend?
Well, you know, I guess I could say I share your bear sentiment, but and I know the Bradley model is, you know, basically, I believe, pointing down for the next several months in this year. But I was wondering, you know, I haven't heard any specific ideas as far as where you think the S&P might go down to, and I was wondering if you could expand upon that a little bit. What do you think, you know, we'll see on the S&P before we get
well, Dan, if I did that, I would lose all of my subscribers. I'm going to do a really long-term chart here for you of the September E-mini futures. I'm going to put it in, and the cash market is overlaid on the top of it. The minimum objective that I'm looking at on this particular move, and I know you're going to think I'm on some type of hallucinogenic or something, but the minimum objective that I'm looking at here is at 1250. That's my minimum objective.
That to me is conservative, but I could fully see that.
Yeah, and all I'm doing there, Dan, is I'm basing this on this 5-wave reversal pattern, and the target on the 5-wave reversal pattern is you take the low from wave 2 to the high to wave 5, and you multiply that times 1.27 or 1.618. And that gives you that 1250 level. Now, I think that once we get below the 1535 level, the low we made actually 1545, the low we made last week on the 23rd, then I think the market is going to start to cascade down, and we could start to see, you know, the market accelerate. Now, on the other side of the coin, if we get above 1650, you know, I could be completely wrong, and you know, I'm wrong a lot, but I'm also right a lot. But my target is 1250. That's what I'm looking at.
Okay. All right. No, that's great. No, I appreciate it.
Okay.
I appreciate that.
It's the same type of scenario that we were looking at when we were watching gold, because once gold broke, the 1555 level, Dan, that was telling you how bearish it was. And, we had several days where it was down almost $100 in a 24-hour period, 2 days in a row as it was making its bottom. So that will happen again in stocks. We haven't had any fear come in here for a long time, and that's why I'm so bullish the VIX. I think the VIX is going to eventually get around 50 or 60, maybe even go back and look at those highs again if something really crazy happens.
I definitely could see what you're saying, a 25% correction, because, we've gone up like, close to, not quite 200%, but, 1,000, about 150% since the lows of 2009. So, 25% doesn't seem that much.
The other thing, Dan, is that there's, even though the markets, had a little bit of a correction here, around 10%, nobody is even concerned. The number of people that are on my side of the page, and I'm not sure that's the right side, but the number of people that are that I'm looking at is so very small. It's just really, truly amazing that I don't see why other people don't see this. But then again, I'm just a technician. I don't look at the fundamentals of earnings and, stuff like that.
Alrighty, sir.
Okay.
Well, have a happy and safe 4th.
You bet. The old adage is from my old days in Terre Haute, Indiana, in order to have a happy 4th of July, don't forget to buy a 5th on the 3rd. But back in those days, they had the liquor stores were closed on the 4th of July, so you had to buy. My family didn't drink. Well, my grandfather made grappa, which is corn whiskey, but so we never. The only thing they ever bought was beer, because my grandfather made the wine and the grappa itself, and I didn't drink till I was 28. I probably should have stopped at 29, but unfortunately, I do like wine. Hey, listen, thanks for calling in, Dan. I really appreciate it.
Thanks, Larry. Bye-bye.
You bet. Okay, we've talked about the Japanese yen. We've talked about the euro. We've talked about crude oil. We've talked about the bonds. We need to talk about the notes, because before I do that, I have to talk about one that we've been following for quite some time, and I think that we are at the moment of truth again. Give me 1 second here. I have to get it prepared, because it's a commodity, and we're not going to be on the road tomorrow. But we've been watching the corn market quite some time here now, and we have yesterday when we were on Monday on the show, it was yesterday, we had a market go down to the 1.27 expansion, making the big ABCD. We had a 10-cent rally from there, and we believe that this is my opinion, of course, but I believe that this 495 level is going to hold in the corn market. So this is something that we talked about on Monday. If you were filled on that, it made the first 10-cent profit objective, but let's just assume you didn't and put your stop just 2 cents under that last low. So you've become a farmer with 200 acres of corn, which is going to be how many bushels? It's going to be about 300 bushels of corn. No, 600 bushels of corn, and you're going to hold that through the fall, and we'll see when they do the harvesting. Got a break here. 877-927-6648.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Okay, we're back, folks, and we're going to finish up this show here with the S&P cash on a daily basis, because I really believe that we're at a critical level. If you get a chance to look at this chart, you'll see that after we made the high back on the late May, we came down strongly and stopped right at a 61% retracement. We rallied over the next 10 days. We stopped at another 61% retracement at the 165 level. That was the first step of the downtrend, and then we broke down to the 155 level. And then after that, we rallied back, and we tried to fill the gap that occurred right after the full moon that we had. And so what we're looking at now is that we have a new moon coming in on Monday. And the adage is, and this is part of the new book that I'm writing. It's going to show these statistics. It's going to, blow people's minds away. Whether they take advantage of it or not, I have no idea. But if you're in a bear market, you want to be selling on the new moon and buying on the full moon. And last on the 23rd, we had a full moon. You should have been buying. We think it's a bear market, and now you're going into the new moon, and that should be sold. These odds are very, very powerful. This has not been published before, and it'll be published soon. But it's very interesting that this is what's happening. We have this gap that's here too, that was left almost 9 days ago, and it's taken the market 8 trading days to try to even get to that level, and we have not reached it as yet. So I think that we're heading down to the 149 level based on the swings that we're looking at here, and I would hope. And by the way, if we get above the 166 level in the cash S&P, that would be equivalent to about 1665 in the S&P E-mini contract. Then this old cowboy is full of beef jerky with nowhere to go. That means I would be totally wrong. But until that happens, this trend has been down. It's been sloping down, and it doesn't look good. We've got lower tops here. We can't fill the gap. We're making 61% retracements. We can't get above them, and those are things of which bear markets are made, my friends. So just keep in mind that that's what we're looking at when we're watching this. If we take a look at the S&P cash, on a longer term basis, give me a second here. If my computer will give me that number. Oh dear, this is hold on one second here. I've got to correct the data. There we go. You'll see that we broke that low where we took out all the lows from May. In other words, everybody that bought in May and went away, that they didn't do the right thing. We got to take a break here. Have a happy 4th. Live every day in an attitude of gratitude, and may God bless.
Hi, folks. I'm Steve Rhodes with TFNN.com, and the trend is your friend until it changes. A free special report is now available on the homepage of TFNN.com, and if you have money in the markets, this free report is a must. If your strategy is buy and hold, this report is a must. If you're a day trader, a swing trader, a Forex or options trader, or just getting into the markets, this report is a must. And it's the second best gift you'll ever receive. Look, if you buy a stock and the general market is trending in the other direction, you've reduced your odds of buying at the right time by 70%. Instead, let me teach you how to get that 70% advantage plus. The plus is a free trial to my daily newsletter service, Mastering Probability. There's no upfront deposit, no charge to your credit card, and I compress decades of education into each daily newsletter. This is a limited time offer, so act now, and I'll teach you how to take the trend and turn it into your best friend. All the details are on the homepage of TFNN.com. Act now.